Hey guys, welcome back to the show. As always, I'm your host, Akil Stokes, trading coach and co-founder of Tier1Trading.com. Today, we're going to talk about position sizing strategies and how traders' motivations change as they get older. Now, in today's conversation, you may hear some terms that you're unfamiliar with, so I want to kind of define them a little bit. We're going to talk about different type of position sizing tactics, such as fixed percentage, such as smooth ratio. Those are going to be kind of the main two that we mentioned. Fixed percentage essentially is trading the same type of risk percentage no matter what. So no matter what type of trade you enter, your position size always equates to blank percent of your total account size. So if you're a trader that risk 2% per trade, every trade, no matter if the stop loss is really far away or really close, the risk is going to be a maximum of 2% of your total account. So it's this nice little kind of ceiling on how much you can lose per trade. Smooth ratio is more of a money management type of strategy that allows you to increase your position size as your account size increases. And the smooth part of the ratio is done to keep you from increasing too fast so that you don't get yourself into trouble. Now, there is a kind of max risk percentage part involved in that, but that's not what the podcast is about. But hopefully that kind of explains the two different ways. One is essentially a fixed percentage of risk every single trade. The other one is more of a fluid percentage of risk because the position sizing is staying the same, which means some trades may be 1%, some trades may be 2%, and of course anywhere in between. All right, let's hop in. And while you're listening, do me a favor, leave me a rating and a review, support the show. Let me know that you like what I'm doing here. That way I'm more motivated to keep doing it. All right, let's do it. Gregory says, Akil, did you start trading patterns immediately using smooth money management, or did you start with fixed percentage? I use smooth money management ever since I learned how to properly position size. So I used fixed. I used fixed fractional at the beginning of my trading career, but I didn't know I was using fixed fractional. I was just doing stuff. But ever since I learned how to trade, I use smooth ratio. I actually made a change this winter to go to fixed percentage on trades that are outside my maximum. So that's why I was able to get into that pound yen trade I showed you earlier. So the problem with smooth ratio and having a fixed position size is that on the bigger trades, and I said this was what got me in trouble with pound Aussie, euro Aussie, pound New Zealand, stuff like that, is that there were trading opportunities that were too big to take, meaning that the trading opportunities were so big that it would be above my 2% risk level, right? Pound yen was a great example of that because the stop was like 200 pips away, something stupid. So I just couldn't take those trades. So I eliminated those pairs. We fell into a time, probably 2012-ish, I want to say, where the volatility started drying up in the market. And we didn't see, the pound yen was really the only pair that gave me like big opportunities like that. So it wasn't an issue. Volatility came back to the market fourth quarter, maybe third quarter of last year as well. When we started seeing really big ATRs on euro yen, dollar yen, I don't know if you guys remember that. And there were some patterns there that I had to adjust my entries to be able to take. So I thought about this winter, kind of I try to make a change, or not try to make a change, but I do my reviews every winter and whatnot. And I still want to be involved, especially pound yen and euro yen, because those are some of my better pairs. Wanted to be involved in trades that had those bigger ATRs without kind of moving my stop loss or moving my entry to like the absolute like maximum level before it's above the X leg. So I am able now to use fixed percentage, but only on trades that are above my max risk. But I do like fixed percentage. I think fixed percentage it's an interesting conversation. I think fixed percentage is a better way of money management. I think it's from the investor in me. It makes more sense to have the exact same risk on every single trade across the board. So you guys know I spoke about my portfolio earlier and how I value consistency. I love that. I love that because different trades have different opportunities, right? If you have a 10 trade winning streak on the Aussie Canada where you're capturing 20 pips at a time for profit, all of that can be taken away with a few bad trades or a few losing trades, on the pound yen. You guys follow me? And then it's kind of weird because now you're like, well, I just won 10 and I lost 2 and now I'm at break even. But having that consistency with your fixed percentage gets rid of that problem. The downside of it is that with smooth ratio, you're able to grow your account at a much faster rate. I'll tell you what I think maybe the progression should be, and I've thought about this as well, is we all go through stages in our trading, right? We go through stages where we want to make as much money as possible, as quickly as possible. And then once we reach a certain threshold, and that's going to be different for everyone. Once you reach a certain threshold of money, your philosophy changes into more of like, I don't want to say protection mode, but it is kind of a protection mode. Like you're no longer concerned with like making as much as possible as quickly as possible. You're more concerned with safety and not losing it. And this was a lesson that I learned when I managed money. When I went into managing money and managing accounts, I went in with the idea, because I was young. I was mid-20s, 25 I think it was. And in my personal trading, my goal was to make as much money as possible, as quickly as possible. So when I went to do my presentations to these clients, who most have ultimately said no, and I would go home and cry into pillows, right? I had my numbers, I had my figures, and I had different versions of it based on risk. And I would always start off with like the one that made the most profit. Because doesn't that make sense? Would you guys do that? Like I had these models. It wasn't necessarily curve fitting, but it was models based off different risks. And I would always start off with the one that showed like the biggest percentage of gain. Because I'm like, if I go in there and show them that I can make this much, of course they're going to let me manage their money. And it was to my surprise that meeting after meeting after meeting after meeting, no one cared about that number. Like, this was new to me. No one cared about that number. They all looked at the most conservative number. And like in my mind, it made no sense. I'm like, well, like, dude, like I just showed you like a model that made like 200%. Like, like what type of idiot doesn't want 200%? And I finally had the guts to ask someone later on in the process. It was actually the guy that gave me the biggest amount of money. He gave me $250,000, and I had to go home from New York with $250,000 check in my pocket, and I'm already paranoid as can be. I don't know why I was paranoid. I'm like, what are people going to do with a check? But in my mind, I'm like, someone's going to like mug me, see the check, make me sign the check, hold me at gunpoint, take me to a bank, and make me give them the money. All types of weird thoughts in my head. But after he gave me the money, I asked him, I'm like, hey, I'm just curious, like, how come you showed no interest in like the 200% return? Like, isn't that crazy? And he told me, Akil, he's like, look, I don't really care how much you make. What I care most is how much you don't lose. And on the 200% return, there was like a 50% drawdown, like max risk. Like there was a time in that model where like it took a 50% risk or a 50% hit. And he's like, there's no way I would ever risk. I didn't make this much money ever risking half of my account. And I'm like, that makes sense. So it made me think about, as you get older, once you get a certain amount of money, it shifts from making as much as possible to conserving it. And I think that's a good approach for traders as well, where when you're in your beginning stages and you're trying to build to a certain level, you use that smooth or fixed ratio money management style. I think smooth is better. It gets you into less trouble. But you use that smooth ratio risk management, money management style to kind of pump steroids into your account. And you can grow it from one level to another level to another level to another level. But once you get to a certain level, I think the mindset should shift to like, hey, I've achieved what I wanted to achieve. I can still make money, but now I've got enough where I can kind of shift the mindset to conserving it more than growing it. And you're still growing it, don't get me wrong, but you're growing it in a different way. You're not imagine sports reference, right? Always. Imagine you're a team who wanted to get out to a lead, and you get out to a lead in the beginning of the game. Do you still try to score at the same rate, or do you become a little bit more defensive? Well, if you're anybody but the Tottenham Hotspurs, you become a little bit more defensive, and you're still trying to win. You're still trying to take advantage of your opportunities, but now the biggest goal is like, hey, don't blow this lead, unless you're the Tottenham Hotspurs, because that's what they do. They don't play defense, and they blow their lead, which would be equivalent of blowing your account. So I do like fixed percentage. I think that's better. But it also depends on what your goals are. Thank you guys for checking out the show. If you have any questions or comments, feel free to leave them below. You guys know that I do read through each and every one of them. I do respond, so I'm not just saying to do it. I want you to do it because I honestly want to support you in any way that's possible. Support me by leaving this podcast a rating and a review, and hitting that like button if you can as well. All right, until next time, plan your trade your plan, and I'll see you guys next episode.